Hey everyone, Mr. Trump is back with another controversial policy, and this time the shockwave is about the H1B visa program, something that has been the backbone of Indian IT industry for decades. He has increased the fee on H1B visa to $100,000 that was earlier in the range of $2,000 to $5,000 based on employee size and other cost. In simple words, if you have to go to the US on H1B visa, you have to pay a fee of 88 lakh rupee in today's term. This announcement has created a lot of panic among both IT employees working in the US as well as investors in IT companies. At the same time, I've seen a lot of miscommunication going on over social media. So I thought of sharing the right information on H1B visa in the best of my knowledge, along with my viewpoint on what can happen next and what is the right approach for investors in IT companies. Alright, let's get started. Let's start with the basics. Those who are not aware, H1B visa is a non-immigrant visa that allows US companies to employ foreign workers in specialty occupation, especially in technology. For years, it has been the primary channel through which Indian IT engineers have gone to work in the US. And India's dominance here is staggering. Indians account for more than 70% of all H1B approvals every year. If you look at the big IT firms, TCS, Infosys, Wipro, HCL, Cognizant, thousands of their employees are deployed in the US through the H1B route. For instance, in the latest approval cycle, TCS got over 5,500 approval, Cognizant 3,700, Infosys about 2,000, LTIMindtree around 1,800 and HCL Tech close to around 1,700. In total, it is estimated that around 3 lakh Indians are currently in the US on H1B visa. Clearly, the Indian IT industry is heavily linked to this program. So when Trump suddenly announces a $100,000 visa fee, it sends shockwaves. Because at scale, this cost becomes astronomical. For an industry where margins are already under pressure due to global slowdown and price competition, this is a serious hit. And that's why investors are worried. If companies are forced to continue sponsoring visas at the same scale, profits will get squeezed. But there's a lot of misconception today where some people are saying that this $100,000 fee is charged every year. But in reality, this $100,000 fee is one-time charge per new petition. It is not recurring and it does not apply every year. Then some people are saying that even the current H1B workers have to pay this $100,000 fee. That's again incorrect. Existing visa holders are completely exempted from this fee. This fee only applies to new petitions filed after the policy takes effect. Renewals and extension on current H1B are not charged, which is why most employees currently working in the US can continue without worrying. But for employees who dream of going on-site to US, this policy means opportunity will shrink. Companies will reserve visas only for critical high-value roles. Having said this, there is no immediate impact on any cost for IT companies. Let's be very clear about this. But yes, any incremental H1B application from IT companies would cost them this crazy fee. Now the big question is, what can IT companies do about it? So first option is increase local hiring in the US. By the way, this is already happening. Now it will only accelerate. TCS, Infosys and Wipro have been building local hiring programs, training US graduates and even setting up campuses there. Of course, it would be costly and would directly impact the margins because the biggest moat for IT company was cheap talent. Then second option is expand nearshore centers. So instead of sending people to US, Indian IT firm can deliver projects from Canada, Mexico and Eastern Europe. These locations are closer to US client, offer good talent and don't involve H1B restriction. Third option is to invest in automation and AI. The more repetitive tasks can be automated, the fewer people need to be physically present on site. This will reduce the dependency on visas. Indian IT companies are already investing heavily in AI, machine learning, robotic process automation and cloud platform. Then over time, this will not only cut cost but also improve efficiency and scalability. Fourth option is on-site would be only for critical talent. Instead of mass deploying engineers, companies will only send key architect, domain expert or project leaders on-site, the ones who are absolutely essential. And fifth option is IT companies can always use L1 visa instead of H1B. So unlike H1B, which is mainly for hiring foreign professionals in the US, L1 is for intra-company transfer. That means if you're working for, let's say, Infosys or TCS in India, company can transfer you to their US office. No lottery, no cap. But it's only for managers, executive or people with very specialized knowledge. Overall, top Indian IT firms are already reducing dependence on H1Bs over the last few years. For instance, between FY15 to FY23, the number of approved petitions for top 7 Indian IT firms dropped by 56%. And this new rule will drop this number significantly. Now the big question is, what should IT investors do? So first of all, there is no immediate negative impact as the fee is not applicable on existing employee on H1B visa. Unless an IT company wants to send a new employee to the US on fresh H1B, they don't have to pay anything extra. I think that IT companies would temporarily freeze this H1B for now as the cost is too high. And over the mid to long term, they would shift to mix of alternatives like increasing local hiring. That would of course impact the margin. Second, they would expand project delivery from nearshore centers that are close to US clients. And third and most critical role would be investment in automation and AI that would not only cut the cost but would also improve the efficiency. At the moment, there's already a lot of negativity for IT sector due to Trump tariff saga and role of IT in disrupting the industry. As a result, IT sector has already fallen more than 20%. And if you look at the valuation, it is now near to long-term historical median. Although the valuations are still not cheap like it was before COVID. So there can be some more pressure on the index and as well as on individual stocks. Now at the moment, everything boils down to your investment strategy. If you are a momentum investor, IT is certainly not a place to be in. Many of the momentum investors would have already exited it. But if you are a long-term value investor, it is not a time to panic sell. At the same time, valuations are also not cheap. From here, maybe let's say 8 to 10% correction at index level can create a fantastic opportunity for long-term investor to consider accumulating IT stocks. That said, the key here is to identify companies that are focusing more towards software or product side of the IT business or companies that are focused on high value digital, cloud, AI and consulting segment. For instance, I really like this ER&D space that include companies like KPIT, Tata Elxsi, Tata Technology, L&T Technology. There has been a sharp correction in this segment. Although the earning growth is missing at the moment due to geopolitical uncertainty. But I think the long-term story is very promising in this space. Then Persistence and Coforge are highly focused on new age technologies. They are also more agile as compared to large cap IT companies and have quickly focused on new age technologies. Then you have few pure play software companies like Newgen Software. Likewise, Intellect Design is also into financial technology software. Then you have Latent View, which is into analytics services such as data analytics consulting, business analytics and insight, advanced predictive analytics, data engineering and digital solution. I know that the market sentiment is extremely negative for such IT companies, but remember that you never get good news and good price together. These companies are high ROE, ROCE, virtually debt-free with high cash conversion ability. That's why they have been a huge wealth creator in the past. Today, everyone is running behind hot themes like semiconductor, data center, AI. Definitely, there is a lot of opportunity in this sector, but at the same time, there are a lot of risk. I recently discussed semiconductor sector in India. I'm soon going to cover data center in detail. My only concern is, at the moment, valuation in such themes have gone too ahead of fundamentals. So as an investor, you need to take a call. What is your style? Do you prefer momentum buying in hot themes, or you like to identify fundamentally strong companies that have underperformed due to some external condition? Momentum investing is very easy because the stock is in uptrend, but it is extremely risky. A great example is railway stock. They were in crazy momentum until last year, but this year they have tanked badly. On the other side, value investing or identifying beaten down stock is not easy because you need to go against the market sentiment and you never know how long that pain continue. But in such cases, you get some really good investment opportunity for long term. The IT stock that I mentioned are actually going through a painful period, but for long term, it can be an opportunity. It's just that the valuation in majority of pocket is still not cheap even after a good correction. Still worth keeping a close eye. And certainly, it's not a time to panic sell. I clearly remember post-COVID how everyone was dying to buy these IT stocks. Today, nobody wants them. I'm sure table will again turn. But you can only enjoy that phase if you have the courage to hold the companies during painful period or even accumulate more of it. So the bottom line is, Trump's H1B visa shock is painful, but it's not the end of the road for Indian IT. The smart companies will adapt and smart investors will too. The only question is, are you betting on short-term panic or long-term resilience? Tell me in the comment, are you a value investor or a momentum trader? And what do you think about IT sector? I'll see you in the next video. Till then, take care.